The siren light is blinking on your phone at 9:47 p.m. A family member is short $180 for a car repair, and the message ends with, "Please, I'm stuck." If you're earning a modest income and you already feel behind, that moment hits differently. You send the money, and 2 weeks later, another emergency shows up. Different story, same urgency. Why does it keep happening, and how do you stop it without turning cold? In the U.S., a surprise $400 expense is still a breaking point for a lot of households. When someone can't cover a shock with cash, the cost often moves to credit, fees, or borrowing from someone close. So if you keep stepping in, you don't just solve one night. You can accidentally become the system that makes the next emergency easier to repeat. This is WealthMentorPro, where every lesson is a step closer to your freedom. Today we'll break down how covering others can create repeat emergencies, and we'll end with one boundary rule that spots the pattern and makes repayment clear. Stay with me, because one sentence can change how you answer the next urgent text. If this helps even a little, you can leave a like and we'll keep going. I've typed "I can't today" with shaking hands. If you've been stuck in this cycle, you're usually asking one question: how do I help without becoming the bank? And a lot of videos either sound harsh or they stay fuzzy. They'll say, "Just say no," or "only give what you can afford," and they skip the reality of low and middle income life. Rent due dates, groceries, childcare, and a savings balance that might be $220, not $22,000. So let's talk about what's actually going on, in plain English. First, think about navigation. If you become someone's emergency GPS every time they're lost, they never have to learn the route. Not because they're a bad person, because the brain repeats what works. Here's what it looks like with real numbers. Your take-home pay is $2,600. Your savings are $220. A relative needs $180 for that car repair, so you send it. The next day, your checking balance runs low, an auto bill hits, and an overdraft fee of $35 appears like a surprise tax. Now your help didn't just cost $180. It also pulled you closer to high-cost debt and stress. So here's a simple move you can do today. Set a "do not cross" line in your checking, like $100. If sending money would drop you under that line, you pause. You don't have to say never. You just don't say yes on impulse. The cost of ignoring this is quiet but real. One rescue can trigger fees, late payments, and interest that eats your next month. And the question to hold on to is this: if you keep paying real dollars, why doesn't the problem get smaller? Second, picture a detour around the same pothole. If there's always a detour, the pothole never gets fixed. Repeat emergencies are often predictable gaps dressed up as surprises. Bills have a calendar. Rent comes monthly. Utilities come monthly. If money had a personality, it would be the kind of friend who shows up on time and expects you to do the same. The emergency is usually timing plus no buffer. Here's the everyday version. A friend asks for $300 until next month. You don't have $300 in cash, so you float it on a credit card. With an interest rate around 20%, that help starts charging rent inside your wallet. And even if your friend pays you back, it might be late. The credit card won't be. So the move here is simple. If you can't cover it with cash, don't cover it with debt. That's not kindness. That's transferring the emergency onto your future self. The cost of ignoring this is that interest quietly consumes the small surplus that could have become your savings. And here's the new question: how do you stay generous without turning your own finances into the next crisis? Third, and this part is emotional. When you rescue someone once, it can be a true one-time crisis. When it happens twice, it starts to become a habit. By the third time, it can feel like it's been added to the relationship's budget. That's why requests sometimes show up right after you helped. It's not always manipulation. Sometimes it's just pattern. And emergencies have a weird talent for arriving on Friday night, right when you're trying to breathe. Imagine a cousin with a $120 shutoff notice. You pay it. Next month it's $90, then $140. It's not a brand new disaster every time. It's the same pothole in a different outfit. Before you say yes, ask one calm question. What changes so this doesn't repeat next month? If there's no answer, no plan, no new arrangement, no next step, you've learned something important. The cost of ignoring this is that you become the permanent detour and your own stability never gets built. And stability is the beginning of wealth building. Net worth is what you own minus what you owe. Every bailout that triggers fees, adds credit card balances, or drains your savings pushes that number down. This is how you stop losing money and start building assets. This is also how you create room for investing later as a concept. Diversified, boring, realistic, once your base is steady. But here's the twist most people miss. The goal isn't to be perfect, and it isn't to cut people off. The goal is to build a system that protects your financial stability and still allows you to be kind. This is education, not personal financial advice, but the principles are consistent for most real budgets. And I'm curious, leave a quick comment. Which request is hardest for you to handle? Rent, car problems, or just until payday? Now let's shift from understanding to action. 3 rules: calm, practical, and designed for low and middle incomes. No hype, no shame, no promises, because wealth building is slow, uneven, and personal. What we're building is control. Rule 1. Decide the category before the cash leaves. Gift or loan. If it's a gift, say it out loud and choose an amount that doesn't damage your month. If it's a loan, treat it like a loan. This matters because clarity prevents resentment. Gifts don't create silent anger later. Loans don't create endless confusion. Here's what it sounds like. I can gift $40 this month, or I can loan $200, repaid as $50 each Friday for 4 Fridays. That's not cold, that's clean. And when money is tight, clean is kindness. Rule 2 is the boundary rule that spots the pattern and makes repayment real. No plan, no pay. 1 sentence. Before you send money, you need the exact bill or purpose, the exact amount, and the exact repayment dates. This matters because it separates a one-time crisis from an ongoing gap without a fight. Here's a simple example. I can help if we set $25 every payday for 6 paychecks starting this Friday. If they can't do that, you don't argue. You don't lecture. You simply don't send. And you can still help in other ways. You can offer to pay the provider directly. You can sit with them while they call for a payment plan. You can help them look at due dates. The point is not to punish anyone. The point is to stop turning your money into the automatic answer. Rule 3. Cap your helping budget and fund it like a bill. This keeps generosity from eating the whole month. The benefit here is stability. When your bills and your buffer are protected, you create room for the long game later. Not get rich quick, just a steady path where, over time, you can save more, avoid high-cost debt, and eventually invest in a diversified, low-cost way over a long horizon with no guarantees. Here's a concrete version. Set $50 a month as help money. If it's used, it's used. If it's not used, it rolls into a small help buffer. You don't refill it with a credit card. You refill it next month. That's how you protect your future self from expensive emergencies and keep your own savings moving forward. Now for the quiet payoff, and it takes us back to 9:47 p.m. You don't answer with emotion first. You do a 1-minute ritual. Open a note and write 3 lines: the amount, the plan, and the impact on your week. If I send $180, my checking drops below $100. Then you choose from your system: gift, loan with a plan, or no. When you do this consistently, something changes. Some people show up earlier with details because they know you need clarity. Some people stop asking as often because the easy detour is gone. Either way, your money gets calmer. Your buffer grows. High-cost debt shrinks. And step by step, net worth begins to move in the right direction. This is WealthMentorPro. Be generous with limits. Build stability first. If you found this helpful, consider subscribing for more calm, practical money guidance. And when you're ready, watch the next suggested video on your screen and keep the momentum going.